Ladies and gentlemen, welcome to Insurance Town. I'm the Mayor Heath Sherritt and the host of this podcast. I am pumped you're here hanging out with me today. I have got my main man, Clint Houke, coming in and hanging out with us today from Fair. And I'm pumped about it because you get to hear all the cool things that are going on with Fair and what they're doing and what that even means. But we get into a lot more than just that. We talk about building a tech stack. We talk about his past of getting into ventures, and we talk about AI a little bit. We talk about, the future of the industry. We talk about the highlights of 20, all kinds of great things. This episode is sponsored by my good friends over at Canopy Connect. Go to usecanopy.com/Heath and check it out. They are a phenomenal platform for you to gather deck pages, to gather loss runs, to do some really cool stuff there. And now they even have some other cool stuff that they're doing that you can't miss out on this, man. I can't imagine an agency not using Canopy Connect. So make sure that you check that out. Use canopy.com/Heath to get your demo, get your discount, all the things. Also, my good friends over at Mav. You don't need a call center, just use Mav. Mav is an AI-powered insurance expert that engages unlimited leads with friendly text to quote, qualify, and to connect prospects to agents. Your agents don't like, or your prospects. Let me get that right. Your prospects don't like getting those phone calls. You don't like getting them. You don't like building that call center. So don't. Why don't you just use a text platform? Go to hiremav.com. Check that out. Tell them the mayor sent you. Also, my friends over at Smart Choice, the fastest growing agency network, hands down. They do what they do for you with no annual fees, no setup fees. Higher premium, lower premium volumes, higher commissions. Man, words are hard today. I just got through interviewing Clint. I just got through interviewing Clint. And so I've been talking a lot on back-to-back interviews. So forgive me. Maybe I'll edit this. Maybe I won't. Anyhow, Happy New Year. I'm going to slide out of the way so you can check out this phenomenal conversation with my main man, Clint. Clint, what's going on, brother? How are you?
Doing well. It's we're getting close to the new year here and
Yeah.
2025 strong.
Yeah, man. You
Uh,
ready to wrap up 2025 and looking forward to 2026? How you feeling about all that?
yeah, on the personal front, I've got a 10-year-old daughter, and so we're,
Yeah.
we're at that stage where Santa and Elf on a Shelf is still very much a part of our lives, but she's also at that stage where I think she realizes that those things aren't real, but it's still fun to pretend. And
Oh,
so
yeah.
if Elf on a Shelf or Santa doesn't do something, she looks at me and goes, you should tell Santa and let's make sure that
Oh,
Santa
yeah.
the elf knows. So it's still very much fun on the personal front. And then on the professional front, it's been great transitioning into Fair as a new building a carrier from the ground up. First time doing that as a part of the core team. It's been quite the experience, and bringing a new product to the industry has been a lot of fun. So the last quarter here was really focused on getting new partners, and as we go into 2026, it's helping them accelerate and helping expand our partnership network across the industry.
That's awesome. All right. So, Elf on a Shelf, what was like the most fun thing you did with your Elf on a Shelf this year or you've ever done?
Yeah. So my daughter for her birthday got one of those old school Kodak cameras that have the
Yeah.
instant film. So we did a fun photo shoot of the elf stealing some snacks, some of my daughter's favorite snacks out of the cupboard, and seeing the trail of snacks and the photographic evidence that she could follow what happened from the
Oh,
night
dude.
before. And so that
That's
was
awesome.
that was a fun little scenario to set up for her.
Which I think is funny that the Elf on the Shelf is kind of known for doing mischievous things, although they're supposed to be making sure you're doing good, which I always thought was fun. I always thought that was interesting. So tell me this real quick before we get into a little bit more about Clint. In 2025, as we wrap up, we're still in December here. This episode will probably air, in January. But tell me, what was one of the biggest highlights for you in 2025?
What I've started to see, which is really exciting in the industry, is almost a pull back to the core fundamentals. So in 2025, for me, it almost felt like this was the year of MGAs. You started seeing a lot of these niche MGAs start launching that says, look, yeah, insurance in personal lines, we're saying that insurance is commoditized,
Yeah,
but there are niche opportunities to create unique insurance products to
yeah,
fit a market segment that MGA can underwrite and can insure better and more competitively and more completely than the large national, court kind of blanket coverage carriers that are out there in the marketplace. And that's really exciting for me to see because that's saying, hey, yeah, generally things are commoditized in certain categories, but there are definitely still a ton of opportunities out there to create really strong insurance products to meet really specific needs. And I like that our industry seems to be going back to our core strengths around how do we properly protect people versus chasing shiny objects. So that
yeah,
was the big
dude.
thing for me. Well, and it's exciting because it allows the industry to move a whole lot faster than it
Yes,
historically has.
yes.
Because, the biggest difference between an MGA and a traditional carrier, and the reason that MGAs can go so fast is they don't have to get all that capacity. They don't have to have all that money in the bank for reserves to be able to pay out claims. They can rely on those legacy carrier partners that have those massive reserves. But then they can move faster because they don't have to go to all 50 states to get their new models approved or to get their new rates submitted. And so they don't have that. And I just like seeing the industry collaborate there to say, hey, we've got to solve these things and we got to do it in action and not just words.
Man, I would love. I know you've been on the show before. This is your second visit to Insurance Town, and I'm so glad you're here. I hope you saw the banners and the welcome signs as you flew in, and hope your limo driver found you with the sign and everything. And I think
Yeah, yeah, they
good,
they they collected me all the way from the mountains of Pennsylvania to bring me
good.
into the podcast here.
There you go. I'm glad, man. So, but for those who didn't hear that first episode, go back and make sure you find that one. But for those, there's been a lot of changes since you were last here. So, talk to me a little bit. Let's take a quick walk down memory lane and let the audience know kind of where you came from and led you up to where you are today. You can either go back from where you were a couple years ago, or you can just go all the way back to the beginning and just catch us up a little bit.
Yeah, yeah. I think the last time we talked, State Auto was still a carrier, and I was a part of the State Auto team at that point in time. Of course, they got acquired by Liberty, which was great for them. They put a lot of effort and energy and work into turning that carrier around. And that was a fun ride and a lot of learnings for me. But yeah, my career has always been in the insurance industry. I've pretty much done every role. I interned in claims and rapidly realized those are probably some of the most valuable people in our industry, but have some of the most thankless jobs, depending upon the claim and the experience there. So, interning there helped me realize how valuable they were and how little interest I had in working in that part of our space. But I've been a commercial fire underwriter. I've been a captive agency owner inside of owning my own State Farm agency. I've been an independent agency owner in the digital distribution channels and helped build a couple of digital agencies, both truly independent and then underneath the umbrella of larger corporate entities. Spent some time at State Auto as an independent inside of an independent carrier. Built a couple of insure techs, a lot around data and analytics and enabling APIs and bringing new tech at the agency broker level. And like I said, right as we kicked off here most recently, had some exposure in the ventures side of the house as a part of the ventures team back with State Farm. And then just recently joined Fair to help build a new carrier and bring a new line of business into the insurance industry.
Yeah, I mean, there's so much I want to unpack there, but you'd mentioned obviously, a lot of things around, be on the agency side and the carrier side, but one of the things I think has been a through line throughout your career is the data and analytics piece of it, going back to early part of your, even back in claims and even now, what you're doing now. Tell me a little bit about, what drew you to that? What helped you realize? So, I guess not early on, but throughout your career,
Yeah.
what data analytics has meant to your career, why that's so important to you, and why you think now more than ever it's so important to pay attention to those numbers and reports and the data and analytics and AI and all of those things. That I do think that that's a great through line throughout your career.
Yeah, absolutely. I mean, at the end of the day, these things, like I said, there's a lot of shiny objects out there. But to me, the important thing at the end of the day, it goes back to the core reason we exist as an industry, which is to protect people when they have a loss and to help them recover, and to make sure that we're doing it to the best of our abilities. So the thing that triggered that for me was when I was a State Farm agency owner. I was 3 months into opening my agency. One of my first clients and households that I insured, she was a single mom. She had two young kids that were in elementary school. She was an independent IT contractor, so she did IT work, but she was her own business, and so as a result, she didn't have benefits. Well, I helped her out with her auto and homeowners insurance, and as I was trained as an agent, I was supposed to cross sell and help her understand about life insurance and disability and all these additional products. But I wasn't good at it yet. I didn't understand how to do that well. And so I asked her about life insurance, but she passed at the time and said, I'm interested in it, but follow up with me a little bit later and let's do that. And we'll have that conversation. Well, I called her a couple of weeks later. She didn't answer. I left her a voicemail and then I forgot about it. Just sort of slipped through the cracks, right? I didn't have the right tools. I didn't have the right systems. I didn't have the right experience. Pick your excuse, but I didn't have the structure in place to do my job as an agency owner as fully and completely as I should have for her. And a couple of weeks later, and this was in March of 2012, she was out jogging in the middle of the day, and she was struck and killed by a distracted driver. 18-year-old kid. Just wasn't paying attention to the road. There was no reason that he should have swerved off it, but he did. And she passed away. And so the grandparents had to take custody of the kids. Well, there's no life insurance in place. She didn't have an employer. There was no benefits there. She was her own business owner. And so now you have these grandparents that are retired. There's no money to help raise the kids. There's no money for college. There's no plan in place there. Um, and I felt that I had failed her as her agent, because that's one of the reasons you work with an agent, is that you understand the risk exposures and you impress upon these people the needs to take care of them, even if they don't necessarily understand the value at the time. And I didn't have the systems in place. I didn't have the tools in place. I didn't have the data tracking that said, hey, this is when this task kicks up. This is this type of follow-up inside of your CRM. This isn't the automated email that goes out, right? I didn't have the systems. And that was the trigger moment for me that said, well, why don't I have the systems? And that sent me down that path of trying to solve that. It's really the reason I went independent from being a captive agency owner, because I wanted to put those tools in place. This isn't something that should have happened because of the failing of an individual or a human. We forget things when we try to keep it all in track in our heads, or we try to have it in a sticky note or a notebook beside our desk, right? Pages get buried. And so I went down that path that said, hey, if I become an IA, I can now build my tech stack. I can build the task systems. I can build the tools that all connect, and I can create a system to make sure that a client never falls through the cracks again. And then I went to the independent channel and realized that none of these tools communicated, right? We didn't know how to spell API, let alone what it stood for at the time when I went independent. And so then I started going from being an agency owner to a technologist to try to figure out how these systems connect, to understand what it took to share that data in a way that became meaningful to enable every agency and every agent out there to make sure that these things don't fall through the cracks for them. And then once you start going down that journey, you just start uncovering more and more of what's possible and what exists in other industries that we don't have to recreate from scratch. We can beg, borrow, steal, and adapt to insurance to really make us more successful and more capable. So that's really what's driven that data journey for me.
Oh man, what a story, man. And I bet you, as it sounds like, that's never left you. Thinking
Oh,
about that family. And that's one of those situations that, as sad as tragic as that is, it's helped you to fuel you to help more people to not have that kind of scenario. And I'm sure you've told that story countless times, as it sounds like you've. got that story down. And so, first of all, I appreciate your vulnerability and sharing that, because that's a tough situation to be in, but it's fueled you to make some better decisions in your life and to help other people. And I know you've been able to help, thousands of people, I'm sure, with that, telling that story and being a part of it. I know you've been on other podcasts as well. And so I appreciate that. So again, in that, I have found, throughout my career, the same, type of situations, as far as having those processes, having those procedures, having those, types of checks and balances in place. But I do find that, throughout my career, I've noticed, that's one area that, surprisingly for me, that not enough agencies fully understand. What does my tech stack truly do for me, or what does, this come, what outcomes can I get from this reporting, where can I pull this from? And especially this day and age, I find that, to me, a little bit troublesome, but at the same time, there's so much green space there, and there's a lot
Yeah.
of room there for improvement as an industry. And I wonder, in building a new carrier and building, a new platform, building whatever you're building that we'll hear about here shortly, how much has that played into what you think? And do you agree with me on that, that not enough agencies quite understand?
Yeah, absolutely. And to do that really well inside of an agency, you need the capacity and time and space to be able to do that. If you as the agency principal are doing it, or somebody inside your office is doing it, it's not a part-time job. To wrap your head around what the technology can do and how to create those integrations, how to create those workflows, that requires a lot of time and concentrated investment to do that properly. And it's blending the knowledge of technology with the knowledge of insurance. And there's a lot of gaps there, right? Engineers build a lot of really cool things that are completely useless for an end user in the insurance industry. I think about this of, the amount of money that carriers over the past decade have invested into carrier portals, right?
Yep.
If
Yeah.
it, hey, really a lot of cool tech, and this is proprietary, and this is what makes us special and different. When really, at the end of the day, what carriers and agents needed was fully exposed APIs to pass data seamlessly in real time back and forth between the carrier and the agent systems. And if you took all that money and resource that was invested into a carrier portal and invested it into connectivity, we would be leaps and bounds ahead as
Yeah.
an industry in being able to seamlessly serve the market and serve customers. And so, those learnings and those experiences that I've had in the industry really helped guide in my ability to bring value to FAIR, to say, hey, if you want to come into this industry, here's how we can do this in the best way possible to support the success of our partners and to take care of our clients.
Yeah. I think that's dead on. And I think, again, as we get into some of this, you brought up, before I get into FAIR a whole lot, I'd like to get into, you brought up, a lot of verticals and a lot of new niches people are developing, and especially using those MGAs and whatnot. I do find that to be something that in 2026 will continue, and 2027 and beyond, of less and less generalists out there, and more, people focused on a vertical or focused on a niche, so to speak. And that niche could be personal lines, as well as commercial lines. And I think even within personal lines, I'm seeing, non-standard versus standard auto versus, high value versus, some of those other niches out there. And yeah, I think, and even in commercial, getting into contractors versus, hospitality versus this or that. Um, and I think a lot of those process procedures, a lot of things you've been talking about with data and analytics and reporting and all of those things, I think are going to continue to see a lot of growth in this next chapter of 2026 and beyond. And I wonder your thoughts on that, and as you're seeing some of that, and maybe whether it's personal lines or commercial lines, what you're seeing.
Yeah, the greater connectivity, and you're starting to see carriers invest in exposing their APIs and creating more of those direct integrations, and the intent there, and those that are really, doing this with deep intent, is that you're taking away um, uh, the effort, the energy, the focus from agents and producers and CSRs on how to navigate systems and how to remember technical information. And you're making that seamlessly available to them. So then they can take that time and energy on focusing on how to serve the customers, on how to serve their niche, on how to uncover the needs of their clients and properly take care of them, and allowing them to be insurance experts and not be automatons that are trying to remember what buttons to click on what screen, on what page, and in what order, because all of that is connecting and being surfaced to that agent or that producer when they need it in the way that they need it. And some of these MGAs, because they're building their own tech stacks, they're enabling that technology and getting that out to their partners a whole lot faster and a whole lot more efficiently, in
Yeah.
a way that legacy carriers, they have a ton of technical debt that they have to undo to be able to build a system today that works as seamlessly as your phone does, or as some of the financial apps that do, that exist out there in the marketplace.
Yeah. And, all that being said, as you talk about transitioning from all of that into the venture space, what did you learn from going into that space based on everything that you'd had in your career? I feel like all of that kind of culminated together, and you probably learned a lot and were able to apply some of that. And I'd love to hear, what all you learned from being on that venture side that applied to all of that, and what you could apply from your past life into that venture space. What did you learn from all of that?
Yeah, absolutely. The one of the biggest components when in my ventures role, when we're looking at startups and understanding, those that had a real shot of building something impactful in the industry versus
Yeah.
those that were going to hit roadblocks, uh, was the blended of the team, right? Folks that came in with really strong technical knowledge, but didn't have the boots on the ground industry knowledge,
Yeah.
struggled, right?
Oh yeah.
They made a great story, built a great piece of tech, but they didn't have the relationships. They didn't have the knowledge, and so therefore they didn't have the trust of the industry. And if you don't have that trust, and you don't have that experience, an agent's not going to make a bet on that new piece of tech, because hey, that's going to impact, that disrupts their business. Even the best, most seamless technology, there is a decrease in the short term of efficiency in that office until that gets adopted, and then ideally that efficiency sees that exponential gain going forward. But there's always a cost, even if it's free, from a technology piece. There's always a cost to a business when you bring something like that in. And again, that new technology also has to integrate and communicate with the legacy technology out there. So if you don't have a good way to be able to connect with AMS systems, if you don't have a good way to understand how to work with Ivan's data, and understand what AL3 files are, and if you don't understand how to the level of technical acumen or resources that the folks are that are going to be adopting your technology, and know, do you need APIs? Do you need a portal? Do you need
Yeah.
self-guided? Do you need technical resources to help implement? Right? All of these things come into play, that you need those leadership teams that have that individual or individuals that have been there, and have sat in the seat of their customers, or sat in the seat of the partners that they want to work with, so they can understand both the spoken and unspoken needs, to be successful there. And so that was what primarily I looked for, to say, hey, do you have that experience and background in it? And if you don't, do you have the team or advisors
Yeah.
around you that can help you guide you down that path?
Yeah, and that's one of the things that I've had the opportunity to work with some startups, and doing some accelerator programs, and um you see a major difference in and I've said this a lot of times, so those that have heard me say this on the show, you can go do something else for 2 or 3 minutes and come back. But yeah, I do think that there's a big difference in the startups that come from outside of our industry and are really good at tech and really good at what they do and development and all of those kind of things. And then there's those people that are really good at the insurance side. They have the relationships, they have the insurance knowledge, they know our industry, and but they don't necessarily know the tech side, the development side. I think the ones that know the industry, they can find developers and find people like that, and they do a lot better job. Not to say that people that come from outside our industry that build a great product can't, but I think they have to develop those relationships. They have to build that trust, and I think they have to learn our flow, learn our process, learn where we've come from, the history. And the ones I have talked to that have come from outside that have done well, they come in and they want to sit down and they interview people and they want to talk to people, they want to learn even the history of our industry, knowing what's happened in the last 100 years and where we've come from and why we've been so far behind in technology and why we're speeding up and ramping up now, and how the industry channel works from independent to exclusive to captive to this to, I mean, the list go on and on and on. I'm getting a headache thinking about it, but you think about that, there's a massive correlation there, in my opinion. And I think that there's a big difference there. And I think, again, you're right. It goes back to having those relationships and that trust.
Now, what I will say is if you're coming from our industry and you're wanting to try to build a technical solution but don't have the technical acumen to do it, you don't have those same hurdles of relationships and knowledge. But however long you think it's going to take and however much you think it's going to cost, multiply that by 4 to 5x,
Yeah.
and make sure that you have the resources and the time available to make that happen.
Yeah.
Because there's inverse weaknesses as well on that piece of it. So, that ideal team is you get that industry person and you get that technical person. So you've got a slower burn rate because you can build tech in-house, and you've got a faster market adoption because you have that market expertise and those relationships to go to market. But it always happens a lot slower and it costs a lot more than you initially estimate for sure.
Yeah. So I do want to say one other thing while we're on this topic, and I would love for you to give advice, so to speak, to our audience that's listening, that's working on building that tech stack. Because as we've seen over the years, the average agency had, 5 pieces of tech in their agency, and now it's building up to 7 or 8. And I imagine it's going to get closer to 10 or 11 pieces of tech if you include like your Microsoft or Google or Office
Yeah.
Suite, then it gets larger. But if your core tech stack, um, how much capital or how much emphasis would you say to people to talk to when they're vetting a tech piece of a piece of tech on their relationship side or on the industry side versus what the tech actually does and how much adoption they need to get it, or what all that kind of stuff? Give some advice here, what they should be looking for, how much they should emphasize on those kind of things, and your ideas when it comes to that.
Are you asking around as an agency owner, how do I
Yes.
evaluate tech
Yeah, yeah,
and
yeah. If they're,
tools?
because a lot of my audience is going to be
Mm.
agency owners, and
Yep.
so
Yep.
um or agents, in an office as they talk to their owner and their principal to say, hey, we need this or that.
Yeah.
What should they be looking for? What kind of questions should they be asking?
I would first start with how much does my problem or my need cost me today? So
Mm-hmm.
start first with the issue that you're trying to solve. Can you quantify it? And
Yeah.
whether it's a problem or whether it's a potential upside.
Yeah.
And figure out that number first that says, hey, it's gotta be less expensive to me at scale than what
Yeah.
this is costing me, or this has to generate X amount of revenue for what the cost of it is, so that at least the unit economics on paper makes sense first.
Yep.
And that's what you
Yeah.
go into that conversation with. And then whatever technology or company that you're looking to work with on that, see how they understand those unit economics.
Yeah.
Can they break that down and help you understand the math problem, the equation to begin with? And then if that math makes sense, if they understand the math and they can understand how your business works and what your needs look like, then you start evaluating the technology that says, all right, is the technology actually going to execute to achieve those target unit economics? And not in a demo, but hey, can I see it in real world scenarios? Can I get a trial version of it? Can I test it? How do we pilot this in a way that allows me to say, look, there is some cost associated with it. There's got to be skin in the game on both sides, right? Any technology company that brings in, there's a cost anytime they pilot with someone. And for you as an agency, there's a cost for you to pilot that. So there's going to be expected shared costs on both sides of that, but there's a cap on it, right? You're capping your potential downside risk by going in from a pilot standpoint. If you can't do a pilot, talk to actual customers. Hey, who
Yes.
is somebody that I can actually see it work inside their agency that they would be willing to have that conversation with me? And then if you're a startup or a tech company, strike a deal with a couple of your really strong early customers and say, look, we need that market validation. We'll give you a discount. We'll give you a bonus, or we'll do something to compensate you for your time, because every time that you show that to one of our potential customers, we know that's taking time away from your business. And that's not a bad thing as an agency to go, hey, you're being compensated to demo this product. Well, yeah, of course, because my agency isn't out there selling policies. We're talking to you right now, and we've all got employees and families to take care of inside of our own businesses. And so be able to understand your unit economics, then get a real understanding of the technology and how it works and how it integrates into the business, and then understand what the training and adoption needs to be from your team, right? So if your
Yes.
team, if your structure isn't positioned, if you don't have the capacity to bring in something new, if your team is grinding every day from 9 to 5 and there is no time or energy for them to devote to learning and development, to adopt a new tool, to adopt a new product, to adopt a new carrier, it doesn't matter how great it is. Your team's just not going to have the energy to be able to do it. And so you need to build in that structure that allows your team to be able to take in a new piece of tech, and you to have the support structure in place to allow them to ask questions and also hold them accountable for actually using it. There's countless numbers of stories of, hey, agency principal buys XYZ, says, hey, team, you've got XYZ, now go use it. And it never gets adopted. And then they look at it at the end of the year, wait, I'm
Yeah.
paying this subscription for a thing that doesn't work. So to me, it's unit economics. It's the real use, it's being able to see in the wild the use of the technology, and then having the capacity and resources inside your agency to actually adopt it and implement it, and then holding it accountable all across the board.
Yeah. I think that there's so many things, and I do think that going back to the problem at hand, the challenge, the pain point at hand, I think is huge, because I do think you're right. Going back to the statement that's been brought up several times, is that shiny object syndrome, and people go to these conferences and they'll come back and, hey team, I just bought this great piece of technology. We're going to adopt it right now. Let's go. And then you have this staff that's like, okay, what do we do with this? How do we do it? What are we doing? And then they freeze, or they don't know how to do it, what to do, and then it doesn't get used, and it's sitting there on the shelf collecting dust, so to speak.
Yep.
And then you got a principal that's frustrated. They're spending money on this contract they spent and they can't get out of for a year because they've done this, and then trying to figure out how to get that change management, and how to get their team adopted on that. And I think you're right on there. And so that being said, great transition. Let's see if I can not screw it up. But yeah, great transition into fair.
Yeah.
Your whole career building up to this, I think, it's pretty fascinating to see where you're at now. I think you add a lot of value to a company like Fair. Tell me, what attracted you, coming from that venture side, coming from your background, coming from being on the agency side, the carrier side, helping this, doing that. What did you see in Fair that was so attractive to you that you were like, man, I want to be a part of this?
Yeah, yeah, absolutely. Well, as our conversation has gone to this point, it all starts with the team, right? So the CEO and founder, Will Betteridge, came in and said, hey, I've got this new product. And I actually first met the team while I was on the ventures team at State Farm. And so I had gotten to know them for an entire year before actually joining the organization, and getting to talk to Will and talk to the original team. Not only did they want to build a carrier that offered warranty products, but they wanted to build it in such a way that would complement the property and casualty insurance industry. It wasn't, here's our product, here's our system, use it as it is, and be happy about it. It was, hey, we've got this product, it's fully developed, but we want to make sure that we design our technology and how we offer it to agency partners in such a way that it complements their business and doesn't disrupt it. And so it was very thoughtful in how they designed their exposed APIs. It was very thoughtful in how they designed their quoting platform. It was very thoughtful in how they designed the commission structures and the coverage terms for the warranties themselves. It's thoughtful in how we designed our learning management system to meet each of those components of, hey, good product and unit economics, good technology, and good support for implementation inside the agency. And it wasn't, I laugh about this and I say it's one of the things that probably makes my job easiest as VP of partnerships and distribution for Fair compared to a lot of other startups or insurtechs out there is I'm not, we don't come to agencies and say, hey, buy our product, pay us money, and then figure out how to monetize it. We get to go out to agency partners and say, hey, partner with us and we'll pay you, right? And we'll pay you without you needing to cannibalize your existing partnerships. We just complement it. And so that's always a lot easier of a conversation to go saying, hey, we're going to help you make more money without any, sunk costs and risk of taking business away from elsewhere.
Yeah. So, you brought up early on, you're bringing a whole new thing to the PNC world. And, this is not your traditional thing. So those that are, been listening to this, really lean in, turn up the volume a little bit and just take a few minutes to listen to what we're talking about here, because this is not home and auto. This is not, your typical policy, auto liability or, comp and collision, things like that. This is a totally different avenue, but it's a great add-on piece. So maybe I'm saying that wrong, but an add-on to bring more revenue to the agency, but also more value to your customers. So at a high level or low level, however you want to do this, tell me about Fair. Tell the team, tell the audience, tell the city, tell the town, whoever's listening about what Fair really is.
Yep. Yep. So Fair, we are an auto warranty company, mechanical breakdown coverage. So traditionally, you think about warranties as something you buy in a car dealership, and it's something you're trying to buy your new car, you're trying to get out of the car dealership, and they're saying, "Hold on, I got to go talk to my manager," and they're holding you back, and you just want to go for it, and they come out and they go, "Hey, we got this warranty for you for $6,000. We can get you a warranty on your brand new car," and you go, "Nah, no, 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 thanks." Then all of a sudden, it's like, "Well, for $5,000, we can get you this brand new warranty." No, 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 thanks. I just want to buy my car and go, right? And you have this really bad experience, and there's a lot of memes out there about, hey, I want to talk to you about your extended car warranty, right? And so if you think about an industry that probably has, even less trust than insurance does at time, warranty absolutely meets that, and it's because of the way that it's traditionally been sold. But when you look at it, it's just like insurance in the sense of there's a risk exposure, right? If you have a vehicle breakdown, hey, you need an engine repair, that's $3,800. You need an engine replaced, that's 6 to 7 grand. And yet none of that's covered under auto insurance. But if that type of issue happens to your vehicle, the average consumer, if they have $1,000 bill, they've got to go in debt to get it done, to pay for it. And if you're a small business owner and you're relying on a work truck to be able to get out to job sites, or you're relying on your car as an individual to be able to get to work, and you can't afford that repair bill, well, that can have a detrimental effect to your family and to your livelihood. And so there's absolutely a need for a product like a warranty, but it just needs to be designed and offered in a way that people can trust. And in my mind, that means that needs to sit with that trusted advisor, which is that insurance agent, and needs to be pulled out of the dealership. And that is also a core ethos of Fairs, as we don't offer our products through car dealerships because we don't believe that's the best place where it fits. We believe that it fits in the insurance industry. And so we partner with insurance agencies, brokers, MGAs, carriers to be able to offer this as an ancillary coverage. And the nice thing about it is for agents that sell auto insurance, this isn't like you've got to learn a brand new way of talking, right? You're not trying to sell financial services. You're not trying to sell life insurance. You're not trying to learn a whole new type of discovery conversation. It's a really simple cross sell of, hey, when you're selling auto insurance, comprehensive and collision pays to fix your vehicle if it's damaged in an accident. What would you like your deductible to be? Great. Just so you know, if your vehicle breaks down, that's not due to an accident. It's not covered under auto insurance because there is no accident for it to be covered under. So if you have that $3,800 engine repair bill, do you want to pay that out of pocket or would you like somebody else to pay for it? Great. We'll add vehicle breakdown coverage for you too. And that's the cross sell. It's just another version of comp and collision, but just for mechanical breakdown. And so it makes it for a really easy cross sell without even feeling like a cross sell. It's just about the needs-based conversation of uncovering for related to auto insurance. And all it takes is year, make, model, and mileage of a vehicle to quote. And you already collect that with your auto insurance quote. So it doesn't break up the flow of sales conversation or needs-based conversation when you're talking to your clients.
And it's still like a year to year type of contract, typical to their PNC policy, and not a 5 year warranty or a 10 year warranty or lifetime
So,
warranty or whatever it might
yep.
be.
Yeah, so this is one of the nice benefits where it really helps complement and drive retention rates and lifetime value for your clients is so our warranty products run anywhere from 1 year up to 10 years and anywhere from 12,000 miles up to 150,000 miles. So you have the flexibility as that advisor, as that agent to be able to offer the right type of coverage. But the nice thing about it is once it's purchased, that rate is locked in. So that rate's going to be the same for that 3 years, for that 5 years. And our average warranties are between 3 and 5 years that most customers purchase. And so what that means for you is you don't have to worry about those rate cycles that you have with insurance. And a warranty is based off of the age and mileage on a vehicle. So even if they go to shop that warranty 3 months down the road, 6 months down the road, when their auto renewal comes up, well, that warranty is going to be more expensive because their car is now 6 months older. It's got another 6, 7, 8,000 miles on it. And so it's a larger risk. And so any warranty quote they get is going to take into account that increased risk. So you've now locked in a price that they can't get anywhere else into the future. And so even if the auto insurance rates fluctuate, you have a product that is really, really sticky. And so, worst case scenario, you lose the auto insurance business, but you keep the warranty. And so now you've got a reason to stay in touch with that client that you've
Thousand
lost
percent.
to be able to win them back. Best case scenario is they go, you know what, auto insurance has fluctuated, but I like all my stuff in one place, which is the business model and of a captive insurance agency out there. And you're able to keep that customer even with that rate adjustments, which helps that retention, which helps that lifetime value. And so it's a really nice complementary product that again doesn't compete with your property and casualty carriers.
Well, then also, if they're rate shopping and, they come to you, you might be a little bit off, and you could say, well, I also have this warranty quote in there with it. And
Mhm.
so, we might be a couple $100 more, a couple dollars here and there more, but we've also included this warranty, and so it gives you that edge that they may not have at the other agency.
Absolutely, absolutely. And a lot of the manufacturer's warranties, they may not be that bumper to bumper warranty. And so
Right.
you're able to offer kind of like offering an umbrella for liability over your home or your car. You
Yeah.
offer that umbrella type of warranty coverage on top of whatever they got from the manufacturers. Or, especially in our gig economy now, if you're driving for DoorDash, if you're driving for Uber, if you're driving for Lyft, if you're using your personal vehicle for commercial exposure, just like for personal auto insurance, there's no coverage for that if you get in an accident using your vehicle for business. Same thing with a warranty. If you bought a personal warranty from a car dealership and now you're driving for Uber or Lyft and you have a breakdown, they'll deny that coverage for you. And again, that car dealership's just trying to sell you something before you get out the door, where
Yeah.
you, as that risk advisor, as the agent, can help understand what their exposure is and make sure they have the right type of coverage for the right type of risk that they have as a consumer.
Well, and also for young drivers, 16-year-old drivers, 17 year, I just had, over the last couple of years, and I got a 15-year-old and I've got a 17-year-old. So that doesn't necessarily have a huge factor on getting a warranty policy where it does on the auto side. And you could add this in and say, hey, your kid may drive hard on this engine or may drive hard on
Yep.
this, car. Well, let's make sure we protect that investment there with this warranty from Fair.
Yeah, yeah. Hey, they're working a part-time job trying to keep their own car taken care of. They go off to college and they take their car with them and something breaks down. You know what? There's not a worry. They can take it to any licensed garage they want and get the vehicle repaired, and they don't have those major expense costs out of pocket for them.
And
Uh, mhm.
how much does I probably know the answer, but just so the audience listening knows, the underwriting carrier or the policy, no matter who the policy is with, has no effect on the Fair policy.
Correct. Yep. So a warranty is different. We're not
Yeah.
an we're not an insurance product. So We are a vehicle service contract. So we just work directly with the shop to pay the posted labor rates and the cost of repairs for parts to get that vehicle back on the road. So there's no crew reports, there's no MVR reports,
Yeah,
there's
baby.
no bloated systems and costs associated with that. And so we even have emergency road service built right into our warranty. So
That's
even if there's
awesome.
a towing or a flat tire change or a lockout, hey, that claim doesn't go on the auto insurance. It can be used right into the
Yeah,
warranty, which doesn't, so therefore you're avoiding claim frequency that carriers use to underwrite on the auto insurance. The other nice benefit of this is our average warranty costs about $2,500 for a personal vehicle for that 3 to 5 year time period across our entire book. Well, agents earn a 20% commission rate on us.
oh nice.
I don't know of any property and casualty carrier that pays 20% commission rates on personal auto insurance. The reason we can pay those commission rates is because we don't have those MVR costs, those clue costs, those big Duck Creek guide wire carrier management system costs, because we're not multi-line
Sure.
carriers, and we don't have all the individual state DOI requirements and operating expenses. So for us, instead of saying, hey, that just goes to our profit margin, that gives us a way to share some of that back to our agency partners to be more competitive. Not only that, but our products, because we're sold outside of car dealerships, the average warranty with Fair runs about 30 to 40% less than what a consumer can buy through a car dealership. So if you get that proactive customers, if you've trained your customers to say, hey, if you're going to buy a new car, make sure you update your insurance before you go and buy it. You have the ability to get a warranty in place before they even go to the car dealership, and you're helping save them in their car purchasing costs by getting them a actually competitively priced warranty. And oh, by the way, the car dealership warranties are rolled into vehicle loans. So now they're paying interest on the premium for their car warranty that they got through the car dealership. You, as the agency, have saved them on that interest payment as well. So
Heck yeah,
you
that's
get
a
to be the
great talking point.
hero over and over again. Yep.
Yeah. So, man, that's some great talking points. And so, as we've talked about, this is a new line, a new, opportunity, a new revenue source. And we've talked about getting your staff involved and getting your team going on that. Talk to me about, what you're doing, with Fair, or what your team is doing to help with some of that adoption. You said that was a big thing that you told people they should be looking for in their tech stack, and how they can help, get their team acclimated and using this and bring it into their workflows. Tell me a little bit what you guys are doing. And then I want to get into, and maybe this is part of it, get into some of the, because what you just talked about was a great scenario. Maybe you tie that into what you're doing with role playing, because I think that would be a huge thing. Like, you just brought up a great scenario that maybe people didn't think about, with saving that, interest and saving some of that. How much does role play come into that? And then, maybe answer that first question. Maybe I asked too many questions at once, but I'm really excited, and I'm really wanting the team, and the audience listening to be able to hear all this.
Yeah, yeah, absolutely. So, I'll go through that structure. First was product, right? We talked a little bit about the product and the benefits for that for your customers. The next piece is technology, right? So we've built an entirely exposed API ecosystem. So you can quote and bind via API. You can do book a business download via API. You can do servicing via API. But we also recognize that not every agency has those technical capabilities. So we have the traditional agency portal. We have the traditional quote flow. We have the traditional digital claim submission. We've also built in on the claim side of things, claims notes. So traditionally, if a customer has an auto insurance claim, they talk to the claim rep at the carrier. You, as an agency, you don't see what's happening with that claim. You don't see any of the notes. You're left kind of in the dark. With us, you get to see all the claim notes. If the customer comes to you and asks a question, you can go into that claim and you can see exactly what's going on, the current status, the conversations we're having with the shop. If you've got a piece of information, you can add it to the claim notes. We want to make sure we're completely transparent with our partners to give you all the tools and information necessary to be that advisor for the client. Our quote links, when you're going through that quote process for a customer, if you get partway through and they say, hey, I've got to talk to my spouse, or let me think about it, or I'll get back to you on that. You can send them that quote link. They can pick it right up where you left off, and they can actually complete the purchase process. And that sale is fully attributed to you. If they just update it a little bit, change some of the coverage terms, you can pick that quote right back up where they left off on it. So when you call them next, you can see how they were thinking about adjusting coverage length or mileage or deductible to fit as well. So you can
Well,
make that
I got to
a
interrupt you on this for just a second. So what you're saying is, I'm quoting their home and auto. I'm going through the thing if I'm an agency or a producer or CSR for that matter, and they tell me, let me think about it. They go ahead and bind the auto. They
Mhm.
bind the home. They get the umbrella. They do all the things. Then they decide a week or two later, okay, let's go ahead and do that warranty thing, or maybe a month or two later,
Yep.
let's go ahead and do that warranty thing. They could pick right back up and it still goes back retroactive back to that. And like, you still get the credit for that sale. You still get the
Yep.
commission. It doesn't go straight to fair. It goes back to the agency that entered the quote.
Correct. Correct. It's all tied to
Yeah,
the
dude,
agent.
that's awesome.
And you're empowering your customer. They could buy it at 2 a.m. while you're sleeping and you come into the office the next day with a new sale. So we've
Dude,
built
that's really
technology.
cool. And so
Yeah,
it's not based on the X date system and it's not based on all of that kind of things that we're used to seeing in the PNC world, but it can still be directly related to that home and auto sale.
right. And again, because there's no clue or MVRs, it's not
Yeah.
like, hey, this quote expires after 60 days because we've got to
Yeah.
run a brand new MVR. We got to run a brand new clue report to make sure there was no accidents in that way.
How are
So,
you working on your end really quick before you get back into what you're saying? Just let me ask this question just to make sure the audience listening is understanding. Um, what prevents someone from saying, "Oh, I've got engine troubles now. A month later, I need to buy this."
yep.
Where's that waiting period? What does that look like? How does that work?
Yeah, absolutely. So when somebody does bind coverage and purchase a policy, immediately post-purchase, they are required to take a picture of their odometer and upload it. So they can do that right through the quote flow. They can send it to you as the agency. You can upload it through the agency portal. There's a number of ways to do that. The other piece of it is we do have a 30-day, 1,000-mile waiting period. And that really is meant to help avoid fraud. That says, hey, I hear that engine noise. Now let me go buy that warranty and immediately submit a claim, right? Our goal is to say we want to keep rates stable and we want to properly cover that risk exposure and make sure that a few bad actors aren't driving up rates for everybody else. And so we've built in those waiting periods to be able to do that.
Yeah, and I'm sure that plays into some of the role play and some of that kind of stuff we'll get
Mhm.
into. But my bad, I didn't mean to interrupt you there,
No,
but that was
no.
exciting to hear, and that was something that I
Yeah,
wanted to make sure that trying to channel my audience here. But you go ahead and finish what you were saying.
absolutely.
My fault. My
No,
apologies.
no, not at all. Yeah, no, the next piece then goes into that role play, right? We've built the technology to enable you as an agency or as an MGA or as a carrier to be able to do business with us the way you want to do business with us, the way your clients want to do business with you. We're coming to you as true partners. One other little caveat I'll add to this as a quick story is because we are not regulated by the state DUIs, we can move a lot faster when it comes to innovation around technology, product, or coverages. When we first started all of our warranties, we only had a single deductible option of $100. We had an agency partner come back to us and said, hey, because we sell this as a complimentary coverage when we're talking about comp and collision on auto insurance, customers get confused when there's different deductibles. Can you add a $250 and $500 deductible to match our
Yeah.
comp and collision? We said, that makes complete sense. In 2 weeks, we turned it around and we enabled $250, $500 deductibles. So from my time sitting on the agency side of the house, it can be frustrating sometimes when carriers say they're partners, but it doesn't always feel like they're partners. We have really designed the way we do business to be true partners with our agents, with our brokers, with our MGAs. And we take that feedback and we can implement it rapidly for them. Which is part of then what led into our development of the learning management system. Because while this sounds great to an agency principal, at the end of the day, most of the times the sales are happening by the team, by the staff, by the producers inside that agency. And so we have designed a learning management system. And traditionally, if a carrier, you just get a product guide, right? A technical underwriting guide of what's eligible and what the coverages are. We have those, but we also have a systems training that has pre-recorded videos that you can walk through and a demo environment that you can demo quote, you can demo work through the agency portal. So you're not worried about messing anything up on a live account. We also have a small in-house sales team. So one other channel that we do sell through is credit unions. Because again, they build long-term relationships and they're helping protect. But credit unions don't necessarily always want to sell. And so we have an in-house sales team that helps with our credit union partners, and we record all those calls. So we've taken those call recordings, live sales calls, we've pulled out the PII information, but inside of our learning management system, agents and their producers and their CSRs can hear live call examples of real customers, whether it's a detail-oriented customer, it's a low-income customer, it's a savvy customer, and they can hear how the sales conversations adjust. And our in-house sales teams, everybody in there has over a decade of experience selling auto warranties to consumers. And so we have then directed sales guides that align with those demo sales calls or live sales calls. So agents can then have that guide that they can even download so they understand how to pivot into that conversation and how to hit on the key points to help clients understand how this product's going to properly protect them. And then the last piece of it is really, hey, at the end of the day, nothing beats actual practice. Nothing beats actually doing it. And so one of the things we do is when we appoint you, it's not, hey, you've got an appointment, now go sell, and we're going to check in every month and say, why haven't you given us more business? We recognize that this is a new line of business and we're a new carrier. We're here to work with you to build this out successfully together. And so we have weekly check-in calls for the first couple of months on Thursdays where it'll say, hey, let's take a look at your quoting volume. Let's take a look at what a couple of your sales conversations have been when your team has tried to bring that up. Bring your agents on these weekly check-ins, whether it's one or two agents, whether it's your group, depending on what works for the workflow inside your agency. But then we'll do the role plays, and it'll be, you know what, Heath, you're an agent. Great. I'm gonna sell you auto insurance and cross-sell into a warranty. Let's talk through it. You'll get to experience from the customer's point of view. Great. Now we're going to flip and you role play. I'm going to be the customer. And of course it feels awkward. And of course it feels uncomfortable. It's like the first time you ever had to cold call. Nobody wants to pick up the phone. You get that fear. You got to get over that hurdle of uncomfortableness. And by the way, if you can role play and sell it to somebody that knows warranty, you're going to have no problem bringing that up to a customer that has no idea what that experience is supposed to
Yeah.
look like. And so we have found that that was the missing key, that early on we didn't have those role plays, but we've recently added in to really help our partners be successful. And we're willing to invest that time and energy
Yeah.
as long as those agents are willing to invest the time and energy with us as well.
That's such a huge value add beyond just fair in that, because it's also helping them to work on role playing with their green producers, their experienced producers, whatever, to get through some of those sales hurdles. But tell me, as it relates to warranty sales and to fair and to whatnot, what are some of those common objections that you get that you're able to uncover and able to overcome?
Yeah, one of the biggest ones right off the bat is just the industry reputation of like, hey, if my car breaks down, they're always going to find a reason not to protect us, not to cover us, right? And so we have built right into our quote flows a coverage guide. So you don't have to be an expert at all the parts on the car.
Yeah.
You can pull up and say, you know what? What's a component of your vehicle that you'd be worried about breaking down? Your transmission, your engine, your fuel injector, your turn signal, your electric window, you name it. And you can type any of those things in and you'll see, hey, it's covered, or no, it's not covered. And we have three different plans. We've got a good, better, best plan depending upon what the customer is looking
Yeah.
for. And so again, we want to enable our teams or our agents with tools so they don't have to memorize everything, but they know how to find it right immediately at their fingertips to be able to answer and overcome those objections. The other piece is the manufacturer's warranty. Hey, you know what? I've already got a manufacturer's warranty. Great, we understand that. Most manufacturer's warranties really just cover the core components of that vehicle, transmission, the engine, the major components. Fares warranties, they're just like that personal umbrella that adds that additional coverage above and beyond. And our plans cover 1,000+ parts on a vehicle. And guess what? You buy a brand new truck these days, it starts at 80, 90 grand. You then fully load it with all the additional electronics and upgrades and unique features. That becomes a six-figure truck. And so if one of those things, components go, those repairs are really, really
Yeah.
costly. Let's make sure you're fully covered for every aspect of your vehicle, that if there is a breakdown, you're going to get that repaired for you.
But
And
yeah, as
so,
soon as I have that repair, then they're just going to cancel my policy. I'm not going to be able to get anything else covered.
yep. So you're locked in. Your warranty is good for the entire time. You can select 3 years, 5 years, 10 years, and our rating tool, our rater will show you exactly how what each vehicle is eligible for terms. So you as an agent don't have to memorize that. So if it's a brand new vehicle, you can go up to 10 years. If it's a vehicle that's a few years older, hey, you'll see, well, this we can only do coverage options up to 6 years. And again, as an agent, you don't have to memorize that. The technology is smart enough to only display the eligible coverage options that you can adjust. And once that's locked in, it's locked in. Oh, by the way, if I sell my car, now I'm paying for something that I don't have. Nope, you can cancel it. It's not like a warranty you buy through the car dealership that's wrapped into your loan. We'll prorate a refund back to you for any unearned premiums. Or if you want to actually make more money off of selling your car, you can sell the warranty with it. You can transfer the warranty over to the new vehicle owner. Guess what, Mr. and Mrs. Agent? Now you've got a new customer that you didn't even have to sell a warranty to, but you've got a reason to reach out to them and say, hey, so and so, you bought this car. It came with a warranty. We'd love to talk to you about your home and auto insurance as well. But in case, you ever have a claim, no, you can reach out to us and we'll help take care of it for you.
And but I had to switch them from this carrier to another carrier. Is that going to affect the rates?
Nope, not at all. Warranties are solely based off of the fact of the year,
Love it.
make, model, and mileage of the car. It's a really simplified product. In fact, it's an easier product to understand and sell than auto insurance is.
And then, I start selling quite a few of these, and I get other agencies that are like, "Yo, I want to start selling some of this too.
Mhm.
I want to refer those to you. Can I get a referral bonus or a referral fee, or can I get something, some sort of compensation for that?"
Yeah, absolutely. So we are set up just like a lot of property and casualty carriers are. If you want to set up your own small network, you want to set up as a wholesaler, you can have sub appointments underneath. We have those structures designed, and we can work through what you want those contract terms to be. By the way, yeah, we have a flat commission rate, but we also have contingency programs built in as well. Our
Love that.
contingency programs are a little bit more dynamic than your traditional property and casualty carrier. Your normal property and casualty carrier, it's a matrix box, and one side is growth and the other side is loss ratios. I have a personal belief that loss ratios are predominantly the responsibility of the carrier, not of the agent. And so the way our contingency program is you get a large percentage of your contingency is solely attributed to growth. How much premium and how many contracts did you sell? And that's the only requirement to earn contingency there. We have a really small component that's associated with loss ratios, and that's just to also help encourage that anti-fraud piece that says, hey, you're our partners. We trust in you to write good business with us. If you feel like a customer may be sandbagging about a potential issue in their car, help us out. Flag that, or you know what? Don't offer the warranty for that customer at that time. Wait until you know that that vehicle's
Yeah.
in good shape. So, but we want to really reward agents for just growth and growing with us, and we want to provide the support and tools to help them do that.
Well, a couple last quick questions, kind of rapid fire style. What if I only sell one or two warranties? Are you going to cancel me?
We have no production minimums. We understand that this is a brand new carrier. This is a brand new line of business. It takes time to learn and bring this on. Also, we don't have the same costs to maintain agency appointments the way that property and casualty carriers do. So we don't have those negative effects that a lot of carriers are trying to offset by creating those production minimums. We just want to see engagement. Be active with us. Now, if you get up an appointment and you never return an email, you never have the coaching calls, you never complete the onboarding, yeah, it doesn't make sense for us to have a partnership, and it's probably best for both of us to go our separate ways. But if you're engaged with us and you want to work with us to figure out how to implement this into your agency, whether you're selling one a month or a handful a year, or you're selling one a day, we're going to be there to help support you.
I'm listening to this. I'm not an agent. I'm not an agency owner. I'm looking for a little side hustle. Could I open up, my own little fair side hustle business?
Yeah, we've got, like I said, that fits more into that network model. We've got a couple of partners out there in the marketplace that are trying to set up, brand new networks or brand new sub appointment models or referral relationships. And so we have programs in place that we can work with peers in the industry that are looking to do things like that.
So I don't have to have a PNC license to sell this.
Correct. There's a couple of unique states that require you.
Sure,
Missouri's one of them. You do have to have a property and casualty license, and you have to add a line of authority for vehicle service contracts. It's a $25 fee to add that on to
sure.
your property and casualty license. But for a majority of the states, there's no licensing requirements associated with it. So you could have CSRs, you could have interns, you could have unlicensed folks, you could have call center folks offering this product through your agency without requiring. So for all of you that have VAs out there, this could be another way
Heck
to
yeah.
leverage the VAs.
Or if you're using Mav, the call center sponsors of my show, you could use them to do this as well. You go to hiremav.com and check it out. No, also commercial and personal lines, correct? So if I've got a book of contractors that have, lots of fleets and, usage of commercial lines vehicles, this could be a great sell for that too, right?
This is a really strong need because, those contractors, they rely on their trucks, they
Yep.
rely on their vans to be able to get to and from work and to keep jobs going. And if their trucks aren't running, they're not getting jobs. If they're not getting jobs, they're not generating revenue. If they're not generating revenue, they're not paying their insurance bills. And so this is a really valuable product, especially on the commercial line side of the house, for your small commercial to medium-sized commercial clients.
Now, last rapid fire, I guess, would be how do they get in touch with Fair? What's the email address or the web address, the LinkedIn? How would they get in touch with all the things to get set up?
Yeah, absolutely. So you can go out to fairwarranty.com. There's a partners section there that you can fill out a request. You can find me on LinkedIn, Clinton Houke. You can shoot me an email, clint@fairwarranty.com. Um, you know, However you want to get in touch with us. I'll end up being your main point of contact. You'll have a conversation with me first, and then you'll work with our team going forward to get you set up and make sure you have a successful partnership launch with Fair.
Awesome. And I'll put in the show notes here if you want to sign up through Insurance Town. We'll have affiliation link as well set up on into the show link there. If they just want to talk to you about some of the cool stuff that you've been doing and just kind of pick your brain about some things, LinkedIn, the best way to do that with you,
Yeah.
Clint?
Yep, LinkedIn's the best way. I'm very active there.
Sure you are.
I'll respond, within a day or so to any messages that come through. And I grew up in this industry. Property
Yeah,
and
you did.
casualty insurance is what I do, and always love talking shop.
Awesome, man. Again, I appreciate you hanging out with us again. I'll make sure I have your driver come pick you up and get you back to the airport here soon. Again, thank you again, brother. I hope you have a happy new year. And I look forward to catching up with you again real soon. And maybe we can have you back on again to update us on any other cool things going on with you.
Hey, sounds great, Heath. Really appreciate the time today. Thanks for having me on.
Yeah, brother. Thank you.